Today, crypto prices react to falling global currency values and a shrinking U.S. economy. Privacy-focused cryptocurrency Zcash reveals Edward Snowden's key role in its launch. And Paxos CEO Charles Cascarilla discusses why some stablecoins look riskier than others. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Digital currency prices continued to rise over the past 24 hours, just as the euro and Japanese yen fell in value and the U.S. economy shrank for the first time in nearly 2 years. By noon Eastern, Bitcoin traded around $39,000. Ether was worth a little less than $2,900, and Polygon's Matic token was worth about $1.24. Okay, on to the top stories of the day. First, Zcash just revealed a major player in the development of its privacy-focused token, Edward Snowden. Zcash's media arm released an interview with Snowden where he disclosed his role as one of the 6 participants who founded the cryptocurrency, along with his pseudonym, John Dobbertin. Zcash shields transactions in pools, which hide them from observers of the blockchain. Republican Senator Thom Tillis is calling for an insider trading investigation into Representative Madison Cawthorn's involvement in a meme coin meant to mock President Joe Biden. In December 2021, Cawthorn appeared in an Instagram post with the founders of the anti-Biden cryptocurrency, in which he also commented, quote, "Tomorrow, we go to the moon." The day after, the price shot up by 75%. Prices later plummeted after NASCAR rejected a deal with driver Brandon Brown, whose "Let's Go Brandon" chant inspired the meme coin. In a tweet, Senator Tillis said, quote, "Insider trading by a member of Congress is a serious betrayal of their oath, and Congressman Cawthorn owes North Carolina an explanation." All right, for our main story of the day, Crypto World's Kate Rooney is at Crypto Bahamas, and she sat down with the co-founder and CEO of Paxos, Charles Cascarilla. The company provides a crypto exchange for institutional investors, stablecoins as a service, and importantly, its own regulated digital dollar, known as USDP. Kate asked him about that stablecoin and how its regulation makes it different from some of its competitors.
Let's start with Paxos. You guys have a stablecoin. Tell us what's different about what Paxos is working on versus, say, Circle or some of the other options out there.
Yeah, I think the maybe number one difference between us and others is that we have a regulated stablecoin. So we have a primary regulator that oversees not just us, but the stablecoin. And that's important because it really creates the right type of trustworthiness and consumer protections, we think, to be something that can be mainstream adopted, not just in the early adopter crypto community, but for goods and services, for all types of everyday payments. And I think that's actually be a theme that we're going to see this year. Is how stablecoins become more broadly used. There's a lot of mainstream and large financial institutions that are starting to think about how they can get involved, and I think they need that type of safety and trustworthiness in order to really be involved in the space.
What do you mean when you say it's regulated and others are not? Do you just have one sole regulator that looks over this, or dive into that?
Yeah, I know there's a lot of different ways to construct a stablecoin. Okay. I think probably the key way that we're doing it is we use our trust company in the state of New York. And what that means is we're holding our client assets bankruptcy remote, fully segregated. If anything happens to Paxos, the client's money is safe. And on top of that, our token itself is regulated by the Department of Financial Services. So that means that there's one primary regulator that's overlooking everything we do. Not one state regulator, another state regulator doing different things in different places, or maybe even completely unregulated in many instances. And I think we're really the only stablecoin regulator that can say that, because we've gone through the hard work of building a regulatory regime that we operate under with the Department of Financial Services in New York.
And so as far as some of the other options out there, there's a lot of stablecoins being built overseas. Luna and Terra comes to mind, the idea of an algorithmic stablecoin that in some cases is backed by Bitcoin and other cryptocurrencies. You've had some thoughts on that.
Yeah.
What's your take on the risk?
Yeah, I mean, I think it's important to understand that stablecoins are a class, and they're not all one thing. So you could have a stablecoin that's backed by T-bills, and you can have a stablecoin that's backed by commercial loans. That's not really the same thing. You can call it the same thing, but it's not. And then you can have a stablecoin that's not really backed by anything. And that is in some sense what an algorithmic stablecoin is. And that's not necessarily bad, but it's not a stablecoin. And I think it's really important to get the naming right, because consumers and users are expecting a certain type of product that has a certain type of safety. And if you don't have it, that's not a problem, but it is if you're confusing the end user. And that's where I think it can be potentially destabilizing, is that you think you have a stable coin, but it's not backed by something. Something happens, there could be a run, and how do you actually protect users?
And what about the interest rate? They offer something like 20% as an incentive to buy these tokens. If that were to run out, do you think people would still be going to that particular stablecoin as far as an option here?
I mean, this is one of the wild cards in the space, is that there's a lot of incentives that are being given out to get users. Now, that's not unusual. Banks used to give out toaster ovens, and there's all kinds of incentives that people give in order to attract new adopters. So I don't think there's anything per se wrong with that. It's what are you attracting them to? Do they really understand what they're being attracted into? And so if they don't, and you're giving really big incentives, it could create a destabilization. And that's the last thing you want. You don't want to destabilize stablecoin. The whole point is that you're trying to create a payment mechanism that you can use in any circumstance, but now you might not be able to.
And US regulators have been particularly worried about financial stability when it comes to stablecoins, and the idea that they're backed by commercial paper and a variety of different traditional financial assets. Any truth behind that, and the idea that there's a risk to financial stability in the stablecoin market and the ones that are backed by short-term debt?
Well, I think at the end of the day, it's important to look at the size of the stablecoin market. And so maybe globally it's $150 to $200 billion. That's pretty small. If you think about the total money supply in the US, it's maybe 60 trillion, depends on how you measure it. So this is a drop in the bucket. On the other hand, it could grow very rapidly. And so what you want to do is, on the one hand, allow innovation. On the other hand, make sure that it's safe, that there's the right disclosures. I think that's the right balance to try and take. I'm not sure at today's size that it's a systemic risk, but clearly if it grows very significantly, it could easily be systemic. And so in some ways you want to lay the right foundation while not, the other hand, stifling innovation. I just think that disclosure is the key here.
And what about central bank digital currencies? If the US were to launch a dollar coin, would that threaten your business? And how would that relationship work between the private market stablecoins and a Fed coin?
So for us, we're for the right type of public policy. We want to tokenize all of the world's assets. And so dollars are an important one, but they're not the only thing. There's $700 trillion of them, so there's a lot of room out there. So if the US government was to come out and create a stablecoin that really fit well with user needs, I think that would be great. On the other hand, it's not easy to figure out exactly how to construct a stablecoin today. We think we know, but again, it's very small. It's just for an early adopter community. What would really work for wider societal adoption? I don't think we figured that out yet. I think there needs to be more iterations that happen, and that's where the private sector can be very helpful and a partner for the public sector. And I think that this process of iteration is something that the private sector does much better than the government. Really, is the government going to be great at moving nimbly and thinking about what is the next niche that needs to be fixed? It tends not to be, and that's where we can be a very good partner. I think that's actually one of the natures of our whole financial and economic system, is that there's a private-public partnership that happens.
And you spent some time in DC, you testified in front of Congress. I'd love to get your take on where we are when it comes to US regulation, what you're looking for and your expectations for the next year or 2 years on making good on some of what was written in the executive order.
Yeah, so there's been a lot of focus in DC on the policymaking side, which is great. And I think there's some element of a kind of a safe harbor and some sandbox that could be put into place that would really be effective for the industry, because it's hard when one size regulation fits all. And I think as the executive order gets put into place and thought about, it's really important to recognize we don't want the US to become the Rust Belt of financial services. I'm from Cleveland, and you don't want the kind of regulation and rules to drive people overseas. And I think we're starting to see that. I don't think it's really happening yet, but if it isn't done in a right way, that it would be a real unfortunate downside. I do think that there's a number of different bills that are working their way through different committees, and different types of members of Congress are thinking about ways in which to help certain parts of the ecosystem. I think that could be good, but we're still early days. It's still really just happening, and it's going to need a couple more cycles.
Okay, be sure to check out that full interview and more over at cnbc.com/cryptoworld. That's all for today, but we'll be back again tomorrow. See you then.